Morning traders, another episode of Technical Tuesdays today. We're going to start things off with the dollar as we usually do. We can see, we got right down to that 50-day simple moving average and price rebounded high off that. It's also the 38.2 Fibonacci level. The RSI also got quite close to that oversold territory. Is this bounce got legs? Was this just a retracement in the dollar and we're going to continue that bull trend? This remains to be seen, but this is really key levels for the dollar. It must hold this as the bulls, or I think its uptrend will be seriously dented. S&P 500, it rallied into that 4.2 level there, the 23.6 Fibonacci level, and it's rolled over now. The RSI we can see as well. We're seeing after that, the EU banned oil. It's caused inflation expectations to move higher, and that's obviously led to potentially, markets expecting a bit more aggressive tightening from central banks, and that's hitting risk sentiment a little bit this morning. Let's look at Euro US dollar again, just above its 50-day simple moving average. It ran up above there yesterday, 38.2 fib level, just below 108. The RSI also got quite close to this 62.55 level, and now we're rolling over again once again. The next levels I'd look at would be the 23.6 and the 21-day exponential moving average, or that former range resistance there around 106. Let's go over to cable. Cable also similarly to the euro, struggling to keep its bull run intact. Got above that 38.2 Fibonacci level, just above 126, and now once again the RSI just short of that 60.44 and looking to roll over here. Euro GBP, not much action over here, to be honest. We can see that these are former resistance here at about 0.86, so that would be the target on the upside. Before there, we obviously got the round number at 0.855. On the downside, we got the 200-day simple moving average around this 0.845 area too. US dollar JPY, we can see it has rallied off that bottom of that range support there and the 50-day simple moving average, just around that 21-day exponential right now on the 23.6 fib level. Interesting one, that especially with high inflation expectations, which you think would feed through to yields. The 10-year yield slightly higher this morning. We had 2.8%. Aussie dollar, it's had a tremendous run of late. But it is seeming to run out a bit of steam now at the moment, not finding as many buyers, with risk sentiment taking a bit of a hit. Above this 38.2 Fibonacci level, we've obviously got the 50-day and 200-day simple moving average at 0.725. We got the 38.2 level there, and the RSI still got a bit more room to run. But if any pullbacks, I think this is a really key level of support here, 0.709, 0.71. Aussie dollar JPY also right up against this 50-day simple moving average. I like to look at this pair because it's a key measure of risk sentiment. We can see it got up this morning, but it's been retraced. Sellers have come in a bit, knocked it back down. Interesting one to have on the radar. Let's take a look at gold. Gold sort of in this tight little range here, just above its 50-day simple moving average. We're looking for the next catalyst to send it higher. RSI is in a bit of no man's land, so that's one to definitely watch. Spot Brent, obviously the ban, the oil embargo from the EU's taken a bit of supply offline, and that's caused, this. We had the break through the top side of that range at 115. Now it's continuing it. I'd say the next level I'd be watching is this 125 level here as resistance. The RSI is pretty close to overbought, so that's one that remains to be seen. Sorry, I can just see. I need to widen this out for us. There we go. Sorry about that. So we can see the 125 areas where I'd be looking. The RSI, it's close to overbought territory. And yeah, looking at interest rate expectations, we can see, it's ticked up a tiny bit here. The December contract has come all the way down from 8, but we've ticked up a bit after that oil embargo and as inflation expectations creep higher. That's it for today's episode of Technical Tuesdays. I hope you've enjoyed it, and I'll see you all next week.